Hi, my name is Tony Giardini. I'm the President, CEO of Trilogy Metals, and I'd like to welcome you to our conference call hosted by Sixth Summit. I want to thank them for setting up the call. And a copy of this presentation is available on our website, trilogymetals.com. So I encourage you to go to the website afterwards and download a copy or go through it. We are listed on the Toronto and New York Stock Exchange under the ticker symbol TMQ. And today what I'm going to do is tell you a little bit more about Trilogy. I expect to go through a presentation in about 20 minutes and then open it up for questions. So hopefully we'll have some questions that we can follow up on, whether it's related to the presentation or the copper market or our activities in Alaska. So let me get started. Trilogy is focused on the Ambler Mining District, which is located in the great state of Alaska. We own 50% of that district. And what I'm going to do is walk you through the nature of that district, the high grade opportunities there, the jurisdictions, and the partners that we have in terms of advancing our projects in Alaska. Before I get started, let me just draw your attention to the forward-looking statements that I'll be making in the course of a presentation. So let me just give you a high-level overview. Trilogy has a 50% interest in the Ambler Mining District. That district contains 8 billion pounds of copper, 3 billion pounds of zinc, and over 1 million ounces of precious metals equivalent. As I indicated earlier, our projects are located in the great state of Alaska, and Alaska has a rich mining history, and we're very fortunate to be able to operate there. There's excellent skills. There's good infrastructure there, and we've got incredible support at the local and government levels as well. We're talking about high-grade copper with zinc and precious metals credits. We have 3 main partnerships that we're focused on with our project. Our joint venture partner in the Ambler Mining District is South32. I'll talk a little bit more about them, and also discuss our relationship with NANA and ADA. The district has significant exploration upside, which I'll discuss in more detail. And I'll be talking about 2 of our projects, Arctic, which we have a feasibility study on that was prepared by Trilogy, released last year, and Bornet, which is an advanced exploration project, which has significant upside in terms of future growth. What I'd like to do is just walk you through an overview of the company. In terms of how we're capitalized, we're in a great position. We've got about $13 million in cash on the corporate balance sheet. We don't have any debt. In addition, when we created the JV with South32, which was in the beginning of 2020 last year, South32 acquired a 50% interest in the district, and they contributed $145 million into the company. So effectively, $72.5 million of that cash, which is held by the joint-owned subsidiary Ambler Metals, accrues to Trilogy. So when you look at our position, we're talking of having a cash position of roughly $85 million. Our market cap right now is about $290 million. We've got large shareholder base, significant major shareholders that hold a significant portion of the company, approximately 65%. They're listed on the slide. Management owns about 2% of the company. I increased my own personal share ownership late last year by buying 200,000 shares in the open market. And so, we're very invested in the story personally. We think that the value proposition where we're at right now is very, very good. In terms of the partnerships that I mentioned that there were 3 of them, South32, NANA, and the state of Alaska, and I'll walk you through each of these. The relationship with South32 goes back to about 2017. South32 entered into an option agreement with Trilogy whereby they could acquire a stake in the Ambler Mining District. And in order to do that, they had to spend $30 million on exploration. They spent that $30 million and then they exercised their option in December of 2019, and we formed the JV in January of 2020. And when that JV was formed, South32 funded $145 million into Ambler Metals, and we provided them with a 50% interest in the Ambler Mining District. So we're in a great situation in that we have a first-class partner like South32 which was demerged out of BHP a number of years ago, as our partner in the district. They've already done significant exploration and due diligence on the company prior to making their investment of $145 million in the district. And that $145 million effectively funds the joint venture company, Ambler Metals LLC, for about 4 to 5 years, depending on the initiatives that we're going to be taking on. So we're in a really good position where we don't have a pressing need to go out and raise money because we're well funded at the JV level. And we're also leveraging, obviously, off of South 32's expertise. In total, South 32 has invested about $200 million into Trilogy and Ambler Metals, $145 million into the JV, $30 million in exploration expenditures, and they also own 11% of Trilogy, which they acquired in the open market. This is the district. This is the Upper Kobuk Mineral Project District, the JV area. It's about 172,000 hectares. The different colors there really relate to how the district was put together. The red color there is the original claims that we acquired from Kennecott in 2002, 2003. The green area were contributions that were made by NANA in terms of forming a JV that was established in 2011. And the blue area is the area of interest that covers the JV. So anything that falls within the blue area constitutes 50-50 interest between South 32 and Trilogy in terms of ownership. And I'll talk a little bit more about the exploration upside in the district as we move forward. In terms of our second partnership, it's with NANA. NANA is a native corporation which operates in the northwest part of the state. They have a rich mining history in the state of Alaska. They actually own the ground on where the Red Dog mine is located. Red Dog is the largest zinc mine in the world, and NANA has a direct interest in a direct profit interest in Red Dog. So our agreement with NANA works as follows. They have the ability to either take an ownership interest in any mines that we develop in the district up to 25%, or they can take a net profit interest of 15%. And they have to make that decision when we make the decision to advance a project to development. So that hasn't happened yet. And once that does, they'll be in a position to make a decision whether they want to own a direct interest or a net profit interest. And the difference is, in a direct interest, they would have to fund their share of capital, with some exceptions related to previously spent capital as well. In a net profit scenario, they don't have to fund any share of capital, but and what happens there is that any payments made to NANA are tax deductible. But the way the net profit interest works is that we recover our capital and agreed upon rate of return before we start making the 15% payments to NANA. And in the Red Dog scenario, they have a net profit interest, which increases every 5 years. But in our case, it's going to be capped at 15% if that's the path that they take. So NANA is going to be extremely important to us from a number of perspectives. One is in terms of a Northwest Arctic Bureau from a perspective of employment and personnel to develop the district. That's going to be important. There's going to be a procurement component. And then NANA also is an important participant in the state of Alaska in terms of having 14,000 shareholders. And so they're very supportive in terms of how we advance the project and the development of the district. So our partnership with NANA is extremely important in terms of the development of a district and how we advance moving forward. The third partnership is with the state of Alaska and specifically with the Alaska Industrial Development Export Authority, AIDA. So as you can see on this slide, on the left, there's a road. That's a road that was built to support the Red Dog mine. And in some ways, we're trying to model ourselves on the Red Dog mine, where we're working with AIDA, working with NANA to build out what we need. And what we're looking at right now is putting a specific purpose road into the Ambler mining district. And AIDA is in the process of advancing that road. So last year was an important year. AIDA received a record of decision in terms of advancing the road. There was just an announcement earlier this year that the right-of-ways have been negotiated with the Bureau of Land Management. and National Park Service. So we're in a very good position in terms of the next steps, and I'll talk a little bit more about that. This is actually where the road would go. You can see that 211-mile indication on the slide. The rest of the infrastructure is already there. The Dalton Highway, which would connect the road to Anchorage, is already there. It's a 2-lane highway that would allow us to transport concentrate once we get to the Dalton Highway all the way to Anchorage. There's an existing rail link from Fairbanks down to Anchorage, and there's a port at Anchorage that's already been built. So it's really about the next step of advancing the Ambler access road, which, as I indicated, is 211 miles, and that would open up the district to development. And it would be a specific industrial use road only to be used for the companies operating in the area. So where we're at in the process is a record of decision was received. The next step is focusing on the detailed engineering, financing, and constructions. So we have an agreement right now, Ambler Metals does, with ADA, focused on the detailed engineering, where we each committed to spend about $1 million on detailed engineering. We're looking to expand that agreement to increase the amount that will be contributed by each party, and we're hoping to have some news in the short term that would highlight that the detailed engineering component of the development phase has been funded. And from there, we would then move into looking at financing and ultimately the construction of the road. This is where the road would actually run, and all those dots and squares and stars are targets that exist for the Ambler Mining District. Sun and Smucker are two targets that are owned by other companies. Sun is privately owned, Smucker is owned by Teck. And I'll talk a little bit more about the opportunities in terms of enhanced exploration in the district beyond Arctic and Bornite. This is the Arctic resource. It's approximately 43.4 million tons. It's a high-grade copper equivalent resource of 4.2%. That's what makes this project really exciting, is a high-grade nature of its deposit. It's a small footprint, and I'll show you what we're sort of looking at in terms of the development of the open pit and the tailings facility and infrastructure on the slide that's upcoming. These were the feasibility study results that were prepared by Trilogy last year and released. And what they indicate is that the base case prices that are noted on the slide, we have an NPV at an 8% discount rate on an after-tax of $1.1 billion. Our byproduct costs are roughly 32 cents. And we've got an IRR of about 27% on an after-tax basis. It also has a low capital intensity ratio of $7,300 per ton. What we've done is we've updated these numbers based on spot prices, and you can see that there's a significant change in terms of the value of Arctic when you adjust to spot prices, with the NPV increasing to $1.9 billion approximately, the cash costs actually going negative 10 cents, and the IRR moving to about 37% on an after-tax basis. So this is a very robust mine, and you can see on a payback period, it's 1.8 years. So we're very excited about the opportunity in terms of moving Arctic forward. These, by the way, are all on a 100% basis for the project itself, and they don't reflect Trilogy's share. And this was a study that Trilogy has put together, and what's happened with this study is that it's been provided to Ambler Metals, and they're basically advancing the project to the next level of development. In terms of the concentrates that will be produced, there's 3 specific concentrates that will be produced: a copper con, a zinc con, a precious metals con. This actually is a copper mine, but if you look at the revenue breakdown, it has significant byproduct credits for both zinc and precious metals. If you look at this on a spot basis, those precious metals components are probably closer to 20%. So in some respects, this is a small precious metals mine producing roughly 80,000 ounces of gold. If you looked at it as a gold mine and converted all the other metals into gold, it would actually be a 450,000 ounce producing gold mine. So this is a significant cash flow generating opportunity with significant upside tied to metals other than copper. This is what the project, what we envision the project to look like. The open pit to the right, tailings facility up top, and the infrastructure in the valley. And in terms of a permitting process, we're looking to start that permitting process later this year. What we've done is we've taken the Trilogy Feasibility Study, provided it to Ambler Metals. Ambler Metals is enhancing the work from that study and really focusing on water management and tailings management, and putting ourselves in a position to start the permitting process sometime later this year. When we benchmark permitting in the state of Alaska, we've seen that it takes anywhere from 30 to 36 months. So that's what we're anticipating in terms of a permitting process as we advance the project. In terms of specific permitting considerations, most of the permits that we require, in fact, all of the permits except one are state permits. So there's no federal lands here. We have a 404 wetlands permit that we're required to obtain, but everything else would be a state permit. And we feel very confident that we'll be able to advance those permits moving forward. And as I said, it's important that we continue to have the strong support of the communities where we operate. So having the Northwest Arctic Borough and NANA as a beneficiary in terms of the economics of the project will really help us in advancing our ability to get this mine built and our social license to operate in the state of Alaska. In terms of a district potential, it's vast and there's incredible opportunities there. We talk about Arctic as roughly a 12-year mine life, but when you look at a number of the targets in and around Arctic, there's a number of opportunities to extend that mine life considerably. So you can see from Horse Creek, Sunshine, Shunak, BT, those are historic resources that are there. And if you total those resources, and even though they're not at the great high grades of Arctic, they still total around 34 million tons, which, if those could be processed through Arctic, would increase the mine life from roughly 12 years to 20 plus years. And that's before we factor in bornite, where there's 180 million tons of roughly 1.5% copper. So bornite is a great opportunity to create additional value in the district. And that's what we're really excited about, is the upside that we have from an exploration perspective beyond what we already know we have at Arctic. This is a survey that we ran 2 years ago in 2019, and you can see the different targets that have been identified. Red are expected deposits and selected prospects that we have in the district. Just to highlight, this is what Arctic looks like on that survey. So you can see the anomaly actually comes up quite well. And here's another example of Sunshine. So when you look at Sunshine, where that border is, you can see the area just to the left hasn't been drilled at all. And that's one of the areas that we'll be focusing on when we look at our drilling campaign for 2021. These are some of the results from Sunshine in our 2019 drilling program. Some excellent results, as you can see: 6.5% copper, 6.1% copper, 6% copper equivalent. So there's lots of upside in terms of the drilling results at Sunshine, and part of the exploration program for the upcoming year will be focused on the Sunshine area to hopefully expand the drilling results that we have in 2019. The Ambler Mining District is known as a VMS deposit, and it compares very favorably to deposits like Flin Flon and Noranda. And as you can see on this slide, those deposits have ultimately operated for multi-decades, 75 years in the case of Flin Flon, 85 years in the case of Noranda. And we see lots of opportunities for the ability to extend mine life, not just at Arctic, but beyond, and particularly with bornite, just given the size and scale of that deposit already. In terms of upcoming catalysts for the story, as I indicated, we've got the Arctic Feasibility Study that has been handed off to Ambler Metals, and Ambler Metals is very focused on advancing that study. We're looking to do an engineering agreement with Ada. That's something that we've been working on with Ada, so we're hoping to have an announcement shortly with respect to where that goes. We have a planned drilling campaign to begin in May. That's 14,600 meters. We're going to be spending $27 million on that program that was announced in November of last year, and I encourage you to go and have a look at the press release that we issued that highlighted the details of the program. And then we expect to commence a permitting program for the Arctic project. In all, when we look at the news flow for this year, we expect it to be considerable, particularly given the drill campaign and the permitting commencement on the project. The stock has underperformed in 2020, and unfortunately that was due to the difficult decision that we made to not have a field season in 2020 as a result of COVID. But we're going to be back on the ground at Arctic and Bornite later this year, and as I said, we expect lots of opportunities to advance not just Arctic, but advance the district as a whole. So with that, I will stop and hopefully take some questions from those of you that have been patiently listening to the story. Once again, ticker symbol is TMQ, listed on Toronto and New York, and you can go to our website, trilogymetals.com, for a copy of this presentation and more information. Dasha, over to you.
Tony. Thank you so much for taking us through your presentation. We have lots of questions, so I'm going to start with the ones that were emailed in. Tony, you were appointed President and CEO of Trilogy Metals in June after an extensive career in the mining industry. Can you discuss a bit about what attracted you to the team at Trilogy?
Sure. I've actually been involved with Trilogy since 2012 when the company was spun out of Nova Gold. It was originally called Nova Copper. So I was a director from 2012 until I took the CEO role in 2020. And what attracted me to the opportunity is really the great job that the management team did, particularly Rick, the previous CEO, in advancing the projects and putting the district together and in finding what I would say are world-class deposits in Arctic and Bornite. And being in a tier 1 jurisdiction like the US, being in Alaska with significant skills in the state, a lot of infrastructure already built, it's a very difficult thing to replicate. So we're in a really strong position where we've got high grade, we've got the benefit of strong partnerships with South 32, with NANA, with ADA, we're well funded, and we're in a tier 1 jurisdiction. So I think all of those things really drew me to taking on the CEO role. And then I think the other thing for me is really the copper market itself. I'm really excited about the prospects for copper. We've had a great start to 2021 with copper, now over $3.60. And to me, it certainly looks like we're heading back to really challenge the highs that we saw in 2011. And when you look at the structural nature of the copper market, whether it's the supply-demand fundamentals, it looks extremely positive from a point of view that it's very difficult to find the types of deposits that we have in the Ambler mining district, and bringing new mines on stream takes time, and grades have been coming down from a supply side for a long period of time. And it certainly looks like on the demand side from electrification of a grid, infrastructure, and EV perspective, there's going to be lots of opportunities for increased demand in copper. So those were the considerations that I looked at when I made the decision to step into the role.
Great. Well, can you explain what are the next steps to advance the road towards a construction decision? Could you discuss the partnership that you have in place with ADA?
ADA has been an excellent partner, and it's really about just continuing to focus on the next steps that I highlighted in the presentation. So we got the record of decision, or ADA got the record of decision. That was a long process to get there, and there was a lot of work that was required to get us to that point. This road into the Ambler mining district has been dreamt about for a long time, and it's been on the cards for a number of years. So I think the last year was a significant achievement to get the record of decision on the road. We got the right-of-ways earlier this year, or ADA did get the right-of-ways. So the next step now is getting this agreement on the detailed engineering nailed down. We're looking at detailed engineering of costing about $70 million in total. So we would look at a funding agreement that hopefully will be split 50-50 between ourselves and ADA, $35 million each. And from there, we then move into the financing for the road and ultimately the construction of a road. And we see the construction commencing at the same time that we would hope to have completed the permitting process and be in a position to make an investment decision on the mine. So that's how we're looking at things, and it's really about working with the state of Alaska. We've had great support from the state, and we think that this is a project that Arctic in particular is about opening up a district, and we think there's lots more opportunities, not just for ourselves, but other companies within the district that already have deposits or that are going to conduct exploration there. So it's really about having a more long-term view about how the district is developed, and that's how we see our partnership with Ada as very much a long-term partnership.
Great. So NANA is also an important partner in the development of the Ambler district. Can you discuss the importance of this relationship and other similar partnerships you may have with local communities?
Right. So as I said, NANA has a rich mining history in the state of Alaska, and we're very fortunate to have them as a partner, and we see that partnership working in a number of different ways. There's a financial component where they're going to be able to financially benefit, whether it's through a net profit interest or a direct interest in the mines. There's the opportunity for creating employment opportunities within the communities in the northwest part of the state, and that's really going to be important for the shareholders of NANA. And then there's going to be procurement opportunities that also exist. Now, we have to be very sensitive to the fact that this road that's being proposed is a private industrial use road only. We want to be focused on not impacting the subsistent lifestyle that exists in that part of the state, which is very important to NANA and its shareholders. So that relates really to hunting and fishing. And those are going to be some of the key considerations that we think about as we progress and advance the road. And then there's other native communities that are also operating close to the district or along the proposed road, whether it's Doyon or some of the other communities. And we're obviously working with them, not just to negotiate right-of-ways, but also figure out how they can benefit from the development of the district, whether it provides for additional development opportunities in lands adjacent to the road, which are outside of our mining district, but would obviously benefit those communities, whether it relates to infrastructure development, whether it relates to fiber optics being run in and along the road. I think there's lots of different ways that the communities are going to benefit. And it's very important that we continue to maintain a very good and close dialogue, not just with NANA, but the other communities in the district, that we don't lose sight of the fact that this is their land, that we don't lose sight of the fact that we're working closely with them to sustain and maintain their subsistent hunting and fishing lifestyle. And so those are a lot of the considerations that we're focused on in terms of working with NANA and the Northwest Arctic Bureau and the communities in and around the Ambler Mining District. Great.
So Harry is asking, is the NPV amount including or excluding the NANA interest? If it's including it, how is that taken into account?
Yeah, right. So as I indicated in my comments, it's 100%. So the NANA interest hasn't been pulled out of those NPV numbers. I believe that what ends up happening is NANA starts to actually see some payments coming out in around year 4 when you look at the recoveries of capital that need to be made and the net profit interest. And because the payments to NANA are tax deductible, although it does have an impact on NPV, we're still talking about a robust operation overall. And as I said, NANA is our partner. They contributed some of the lands that are part of the Northwest Arctic Bureau. So it has to be a good deal for NANA and Northwest Arctic Bureau and for Ambler Metals, Trilogy and South 32 as well. So we think that there's lots of prospects. But Harry, if you're interested, what I suggest you do is drop Pat Donnelly a note, and he can give you the specifics as to what the NPV impact is of the NANA net profit interest, assuming that's a direction that NANA goes in, and we won't know which way they're going to go until we make a decision to move Arctic forward, which at that point they would have to then let us know what their choices are. And that's really the reason why we haven't pulled it out of the economics, because at this point we don't know if they're going to take a net profit interest or direct interest in the mine.
Great. We also have a survey after the webinar that, Harry, you can leave your information and speak directly to Patrick or Tony. So John is asking, for after-tax payback period, what have you assumed with regard to financial structure?
Yeah, so everything has been done on the basis of equity right now. There's nothing that's factored in terms of debt. Clearly, we're not at the stage where we're looking at the funding of a capital piece of the project at this point, although we're starting to get very close. And once we start the permitting process, we'll be looking at that. And the way the debt finance or the financing of the project will work is each party, South 32 and Trilogy, will fund their pro rata share of capital, and then subject to what NANA ends up doing as far as whether they take a net profit interest or participate in the ownership of a mine, then they would possibly have to finance their share of capital as well. So we're going to look at a lot of different options, and we know that there's lots of options available to us from a funding point of view in terms of debt options out there. And as I mentioned earlier in my comments, we're talking about roughly 80,000 ounces of gold a year. So this is a mine that lends itself well to looking at royalty structures or funding associated with the precious metals component. But we think just given the robust economics and the quick payback associated with the mine, we're very confident that there's lots of funding opportunities available to us as we move the project forward. So the plan is to kick off a funding process later this year. We've started a process now where we're really starting to stand back and think about what the next steps are for funding, but we're confident that we'll have lots of choices to be able to look at, particularly in the current robust metals environment.
Great. Chelsea is asking, are there any provisions for any of the parties to modify either the percentage ownership or payout amounts if the commodity prices increase significantly?
Yeah, so the way there are not. So let's go through the two principal agreements. There's probably going to be three agreements when it's all said and done. So the first agreement is between ourselves and South 32. So what we have is a 50-50 JV, and each party gets their share of metal that's coming out of the any of the projects in the Ambler mining district, and they can do with that metal as they see fit. If one party is not able to fund their share of capital, the other party can fund on their behalf, and then there's an ownership change in terms of the amount of direct ownership. We don't see that as something that's going to happen because we think there's lots of opportunities for us to fund our share. So we don't see a scenario in that case. In the case of NANA, so there's two opportunities that exist there. One is that NANA takes a net profit interest of 15%, or the second is that they take a direct interest of up to 25%. And the way their option works is if they take the net profit interest on the Arctic mine, as an example, then they never have the ability to take a direct interest in any other mines that are developed in the district. If they take a direct interest in the mine, i.e. they take an ownership interest in the mine, they preserve a right to be able to take a net profit interest in future mines. So we don't know where they're going to go. There's a royalty that's also due to NANA as part of the original agreement, and that royalty is factored into the economics that we've shown. So NANA would further benefit from higher commodity prices, although the percentage of a royalty wouldn't change, and they would continue to benefit strictly from the perspective of those commodity prices themselves. I think the other, and then the third component of is really tied to the road. So right now we are focused on arriving at an understanding on the detailed engineering. Then the next phase of negotiations with ADA will have to be on a tolling agreement associated with the road. And we'll have to see what components factor into that tolling agreement and whether the pricing of commodities factors in terms of a more rapid repayment of the tolls associated with the road or not. But that's going to be subject to negotiation, and we're not at a stage where we have any terms that we're in a position to discuss right now. The last comment that I'll make on commodity prices and higher commodity prices is that this project has a great payback. It's actually quite robust even in lower commodity prices. And where we really have huge opportunities is in the ability to find other deposits that can either be processed through the Arctic mill in the future or other development opportunities in the district. So if we have higher commodity prices, what that's going to mean is that the grade of what will be being able to mine, the cutoff grade will be lower, and that will just give us more opportunities within the district. So that's where we see tremendous upside in the district, and that's what I think people need to appreciate, that our story isn't just about Arctic. Arctic is the first step. It's about Bornite, and it's about the district potential that we have in the Ambler Mining District, which we believe to be vast.
Great. DeBart is asking, when do you expect first shipments from Anchorage?
You know, that's really going to be dependent on a number of different factors. One is the permitting process. So that's expected to start later this year. So assuming we get into a position where all of that comes together, we could be in a position where we could make an investment decision by at the end of 2023, probably early 2024. And then we would have to see the road development occur, and then it's a mine development. So, you know, realistically, you're looking somewhere to probably subject to how the road and mine development go, because you're having to obviously look at the logistics and ensure that you've got people on the ground there during the spring and summer season. You're probably looking at 2027, 2028 in terms of timing for having everything done, but it is dependent ultimately based on the permitting process, the timing of a road, and your ability to, you know, not be caught out by adverse weather in the district.
All right. John is asking, what resources are you drawing upon for S32?
So right now, you know, we're really working with South 32 in terms of you know, our readiness for the current season, and we're looking obviously at COVID protocols, and so South 32 has a number of operations. They've got a large development project in Arizona, but worldwide operations as well. So we're drawing on their expertise in terms of the existing operations that they have in place, and looking at COVID protocols. We're working very closely with their exploration team. So we've got a geologist on the Trilogy side. The rest of the Trilogy team all ended up going to Ambler Metals. So what we've done is we have a technical committee that consists of Trilogy, South 32, and Ambler Metals personnel. So we're really leveraging off of South 32's technical skills on the exploration side, and working collaboratively to better understand the exploration potential in the district. And then as we move through the study process and start to look at the operation and getting up and running, my expectation is that we'll be drawing a lot on operating skill sets and operating protocols, and just, you know, what it takes to run a mine in a place like Alaska, and working very closely with the South 32 personnel in terms of engineering, construction, and management. So the way our relationship works with South 32 is there's no management fees paid to South 32, there's no management fees paid to Trilogy. We have an independent management team at Ambler Metals. CEO of Ambler Metals, by the way, Ramsey Faraz, was a former senior projects person at Newmont. He has vast experience in terms of the development of large-scale mining projects. So he's put together a very independent team, and he'll be the person that will be spearheading the development of Arctic and the district as a whole. But we'll be working obviously closely on drawing on expertise either from Trilogy or South 32. But having South 32 there, having all of our protocols, all of our systems and processes in place, puts us in a position to really be able to hit the ground running once we make a decision to advance a project.
All right. So Jehu says, well, first he says, hi, Tony, thank you so much for the great presentation. And he has two questions. So his first question is, which countries may be the off-taker? And his second question, he says, might be a bit detailed, but he would like to know if there will be payments in lieu of taxes agreement with Northwest Arctic Bureau, and if so, would the payment amount be similar to Red Dog Project?
Right. So let's start with offtake. At this point, we haven't really looked at offtake, and as I said, there's what I described earlier is the way the project will work is that each party receives its share of a metal. So at the end of the day, what South 32 may choose to do with its share of a metal may be different than what we choose to do with our share of a metal. I think the important consideration for offtake is that there's already an existing deep sea port located in Anchorage, and that gives us, and it operates on a 365-day basis, so it's open year-round. And that gives us lots of opportunities, whether that offtake ends up going to Japan, whether it goes to the lower 48, whether it ends up going into Norway, where there's a number of refineries that would be interested in the concentrate that we would be producing. We think there's lots of options, and that's something that we'll have to look at. And my expectation, by the way, is that ourselves and South 32 will work collaboratively to do what's best for the project. And I don't know if it makes a lot of sense to split the offtake into two different components, but we'll just have to see how that plays out. So, that's how we're looking at offtake now, and it's still a bit further down the road. In terms of payments in lieu of taxes, I don't have the specific details on how that would work, and I'd be very happy to answer that question in more detail and get the right people on the call to address that. But our expectation with the Northwest Arctic Bureau and with NANA is that they will benefit directly through the either the direct interest that they own in the mine or the net profit interest, and then whatever other taxes are required to be paid will be paid directly to the Northwest Arctic Bureau and the district. So where we see the real benefit for the community is through employment, through procurement opportunities, through either a net profit interest or direct ownership interest, and then clearly through any taxes, et cetera, would be paid. If a project is as robust as we believe it to be, we would hope that there wouldn't necessarily need to be that we would be making payments directly in terms of any taxes that would be required to the bureau, but to the borough. But as I said, I'm more than happy to get on the call and walk through those specifics with anyone that's interested.
Great. Yeah, great reminder to complete the survey after the webinar is done to leave your information. So Bob says, good day, Tony. Do you have any general feelings about the potential political headwinds that change in administration may bring?
Yeah, we get that question a fair bit. And here's the way I sort of look at it. We've got great support in the state of Alaska, and that's not going to change. The state is very focused on really looking at additional development of industries in the state. It certainly seems that just given the impact that's happened to the state's finances from a lot less offshore drilling and a lot less oil and gas exploration, that there's a need for other industries to advance. There's already a number of significant mining operations in the state of Alaska. There's a number of potential projects. We think our project fits nicely into the development plans for the state simply because we've got a native partner in Northwest Arctic Bureau and NANA, and there's a direct partnership interest that is paid to them. There's the opportunity for procurement and employment opportunities in those communities. We're talking ultimately about opening up a district that, if we're successful, will operate for decades upon decades, and will hopefully create a lot of financial benefits for the state as a whole. And lastly, we're dealing in commodities that are going to be very important moving forward, whether they're copper or zinc, in terms of what needs to, what's going to be needed to support infrastructure and growth in a lot of industries. And that's before we even talk about Borneo, which also has a very large cobalt resource, and whether we've got the opportunity to ultimately be able to develop that resource and produce cobalt as well as copper. So we think it's a combination of the metals that we'll be producing, the fact that we have a strong partnership with NANA, the fact that we have great state support, and we continue to believe that there's going to be great state support going forward. And then when we look at some of the commentary that came out during the election process, where there were specific comments made about the development of responsible mine development and base metal opportunities, we think we're in a very strong position. Now, we know we have to go through a permitting process. we had to go through that process with respect to the record of decision, which by the way had commenced under a previous administration before the Trump administration come into power. So we're confident that we'll be able to put up a strong business case, not just for the development of a project, but for the rationale of the metals that are being produced, copper and zinc, for the fact that we've got a native partner and that there's a significant opportunities that will accrue to citizens of the state of Alaska, but also to the government. So we think all of those things point to a positive outcome in terms of how we move forward.
Wonderful. Raziel asks, what is the estimated capital cost for the road? Will Trilogy contribute to that cost, perhaps via user fees?
Yeah, so the road, the road's going to be developed in phases, and what I would encourage anyone who wants to find out more about the road, you can actually go to the ADA website. They've got a tremendous amount of information, not just on the permitting process for the road, but on estimates associated with the road and the financing associated with the road and what the plans ultimately are. The road cost has fluctuated. It started out originally as a $350 million road, then it was $450. I think it's somewhere around just over $500 million right now. It really depends at which road you're ultimately looking at, because the expectation is that you would go from what would be a sort of phase one pioneer road to ultimately a single lane road, which would be a single lane all-weather gravel road with pullouts, and then ultimately to a double lane road that would operate. So when we talk about $525 million, we're talking about the aggregate associated with the double lane. And I think when we look at the initial development of Arctic, be interesting to see whether that double lane is required if we're talking about the first mine. That's something that will have to be worked through as we look at the development of a road. In terms of a funding for the road, what we're going to do is co-fund the detailed engineering. That's in the process of being negotiated, and then the next step from there will be a tolling agreement that we would hope to negotiate with ADA that would look at the funding, the repayment of the money that would be needed to build the road, because ADA will be building the road, financing the road, and we would be one of hopefully many mines that will operate in the district that will be using the road. So it's about how do we negotiate what's an appropriate and fair amount for Ambler Metals to pay for either the development of Arctic or Bornite, and that's going to be subject to negotiation that will be happening over the next several years.
All right. Harry asks, what would you determine the greatest challenge you have to resolve bringing the projects online?
It's a mining project. You're always going to face all sorts of challenges and issues. I think that's the beauty of these projects, is that it's not one specific thing. We're going to have to deal with, obviously, all of the issues that have been, questions that have been raised, whether it's infrastructure associated with the road, whether it's a permitting process that we move through. Ultimately, we're going to have to operate within the area. I think the most important things from my perspective is we need to have a strong relationship with the communities where we operate. We need to work very closely with NANA and the Northwest Arctic Bureau. We need to not lose sight of the fact that we want to preserve their subsistence hunting and fishing lifestyle. We need to be in tune with what they're looking for and make sure that they benefit directly from the development of the district as a whole. All of those things need to play out. It needs to be not just about Ambler Metals or Trilogy or South 32. It needs to be about how we develop a district over a long term, and we do that in a responsible fashion. And we're very in tune with other stakeholders, whether it's NANA, ADA, the state of Alaska, federal government, the citizens of the great state of Alaska. I mean, those are going to be the important considerations. And then on top of that, you're going to have the challenges of working in, what can be a rugged and challenging environment. I was a CFO at Kinross for just over 7 years, and we have the Fort Knox mine in Alaska, and it's it was a great mine, operated very, very well, and was a low-grade operation, but was very, very successful. And I think that it's how do we harness all of those great skills in the state to deal with the challenges that we have in building a mine. And then, the other factor is we're somewhat constrained by a fairly short drilling season. And so we'd like to conduct, obviously, more exploration in the district because we think there's tremendous upside. So it's how do we, pick the appropriate targets, because we have so many of them, to advance where we want to go in terms of looking at additional potential in the district. So those are the things that I look at. There's a whole host of opportunities there. I think we're in a great position because of the partnerships that we have with South 32, Ada, and Nana.
Well, John is asking, polymetallic mines do have a history of challenges with respect to consistently effective separation of products. How do you rate this risk for this project?
It's a great question. We've done a lot of work on what we believe will ultimately happen from a processing point of view. There's nothing that has come out of the work that we've done that would seem to imply any specific challenges associated with the VMS deposit at Arctic. Clearly, we'll be doing more work, and part of a drilling campaign in 2021 is 7,600 meters of met drilling. So that's really to focus on some of those types of challenges and to better understand that. What we've had done now is we've had a pre-feasibility study work done and a full feasibility study on the project with recognized engineering firms. That study, by the way, is publicly available. It's an NI 43-101 study, and you can either download it from a website or you can go on to CDAR and download a copy. So it has all of the details associated with the deposit and how we've looked at recoveries and the work that's been done. I think we feel very confident, but part of the next level of work that we'll be doing from a detailed engineering perspective will be to look at those challenges. But we don't see anything that is unique or problematic in terms of how we're looking at processing. What we really see is a lot of opportunities in terms of how we look at processing. And the bigger picture for us is how do we draw on some of the other satellite deposits that exist in the area, and how do we bring those into Arctic, once we get Arctic up and running.
Tony, it's Pat here. Can I add a little bit more color on that?
Yeah, sure. Go ahead, Pat.
Yeah, typically, polymetallic massive sulfides can be challenging to separate because the mineralogy tends to be quite fine. And at Arctic, because it's been metamorphosed, the sulfides are actually quite coarse. And so because of that, it's relatively straightforward to separate the copper and the zinc and the lead minerals and produce the three concentrates. So that's the technical answer. So I'll leave it at that.
All right, thank you. Imrose has a three-part question. She asks, please go into a bit more detail on the following JV terms with regards to future ownership and exit options with South 32. The second part is the details on the NANA agreement in terms of ownership versus earned interest. And then lastly, funding for the road.
Okay, sure. The JV interest, let's start out with South 32. South 32 owns 50% of the deposit through their interest of Ambler Metals. We own the other 50%. They have just over 11% interest in Trilogy directly. I can't really speak on what South 32's plans are ultimately. The way our JV agreement works is that if one party wants to exit the JV, the other party has the ability to acquire that JV interest as a right of first refusal. However, if that occurs at the corporate level, then that doesn't apply. So in that case, there's specific provisions in our agreement that sort of relate to what would happen there. But in that case, if someone, for example, wanted to acquire Trilogy, South 32 would have to decide whether they wanted to basically make their own bid for Trilogy. That's how that would work in the context of the South 32 relationship. Our focus is really on Trilogy shareholders. Our focus is on ensuring that the value for the Ambler Mining District is specifically recognized in terms of the huge upside that we believe exists, not just at Arctic, but more importantly in the district as a whole. So we're going to be doing everything we can to really highlight that tremendous value that exists in the district. With respect to the NANA agreement, I think I've given a pretty good overview already, but I'm happy to just highlight a couple things once again. NANA basically retains the option when we make an investment decision to either take a direct interest in the mine that's being built or a net profit interest. If they take a direct interest, then they're obligated to pay their share of capital for the project, and they would basically be, have a direct ownership interest, and they would benefit to the extent that they have that direct ownership interest. But they would also have to contribute, with some adjustments, their pro rata share of capital, including sunk capital that would have already been spent. And as I said earlier, if you look at the Red Dog mine, in the Red Dog situation, they've taken a net profit interest, which has ratcheted up over time because of their agreement with Teck. In our case, it's at 15%, and it stays at 15%. And the way the net profit interest works is they get 15%. However, we get to recover the capital spent on the project, and we get, I believe, a 9% rate of return. And then at that point, they get a 15% net profit interest, which would be tax deductible at the company level. So those details are available simply because, once again, you can go onto the CDAR website for publicly listed companies in Canada, and that agreement is on the website, which would provide all of those details. And then with respect to the funding of a road, what I would encourage everyone to do is really go to the ADA website, because ADA has a tremendous amount of information on the financing of the road and how the road's ultimately going to be paid for. But the idea is that it would be a similar arrangement to what happened with respect to the development of a Red Dog mine, where there was a specific purpose road and port that was built to allow Red Dog to get into production, and that was paid for by the company that was benefiting from the road and the port. So in our case, it's going to be paid for by the mines that get developed. And in the business case for the road and what's been advanced since the permitting process began, the record of decision was planned. It was always focused on 4 mines: Smucker, Sun, Bornite, and Arctic. And so I would encourage anyone on this call that has a specific interest in how the funding of a road works to go to the ADA website. And I can't do justice to the specific details, but the website contains a significant amount of information on what the plans are as far as the funding and development of a road.
Well, I am conscious of time. We have so many questions, so I'm going to finish it off on this last one. Can you briefly please talk about the team that has been assembled at Ambler Metals?
I like that, Dasha, that you said briefly, so I'm going to do that exactly briefly. We had a great year in 2020. We had the formation of a JV. We had the feasibility study that came out with respect to Arctic, which shows what a robust project is. And through ADA, we had the record of decision on the road. But probably one of the most underlooked components of what we did in 2020 was putting together the team that we put in at Ambler Metals. So who we have there is we have Ramsey Faraz, who's the president and CEO of Ambler Metals, and he reports up to a board that consists of 2 representatives from South 32 and 2 from Trilogy. And Ramsey, as I said, has a rich development history. He's a mining engineer and has had a long career with Royal Dutch Shell, and then spent roughly 8 years with Newmont in Denver, involved in a lot of different projects in all sorts of challenging, interesting areas. Ramsey's relocated up to Anchorage. He's based there, and he's very excited about how we're going to move the project forward. So Ramsey's the CEO. And behind Ramsey, what we've done is we've hired a local Alaskan as the CFO, and we've also hired a COO who had lots of operating experience in the state of Alaska, and he was looking for an opportunity to return. And then what we did was we took all of our Alaskan personnel, which were at a Trilogy level. They were the people that were focused on exploration, the camp, and the management of our operations there, together with the team that we had put in to look at permitting, and all of those people have formed part of a team. And what Ramsey's doing now is building out that team in terms of adding additional personnel as is required. So, we've got, in basically a very short period of time, we built an infrastructure located in Anchorage that's focused on managing the project for South 32 and for Trilogy in terms of the advancement of the project. And so we feel very fortunate in terms of the quality of the team that we've been able to put together. And as I said, it's one of those things that is often overlooked simply because people are focused on things like, copper price and share price and so on. But having that team in place is going to hold us in good stead as we move forward.
Wonderful. Well, thank you so much. I think that's all the time we have for today. And I would like to thank everyone who submitted questions. If we did get a chance to answer your question, and if you've just thought of one after this summit as well, there is a survey after this webinar closes that you'll be directed to. So feel free to fill out your information there, and the Trilogy Metals team will be happy to answer your questions. And so with that, I will pass it off to you, Tony, to give your final remarks.
Well, thank you, first of all, to Sixth Summit for hosting us in this webinar and this presentation. I do encourage everyone to go onto our website, have a look at the presentation, the detailed materials that are there. If there's any other questions that you have, feel free to reach out to either Pat or myself. I'm very happy to follow up. We think it's a great story. As I said, I increased my own personal shareholdership interest by 200,000 shares in November. I'm putting my own money on the line in terms of how I think the story is going to play out. I don't think people have twigged on to the fact that not just do we have a great project in Arctic, but we have spectacular upside with exploration in the district and with bornite. And we think there's a very rosy future for copper as things are definitely looking up in terms of the copper price. And in addition, we obviously have exposure to precious metals, zinc and lead. So encourage you to have a look. We trade on the ticker symbol TMQ on both New York and Toronto. I very much appreciate your time and good questions. Thanks again.